compensation within the alternate asset space can be complicated, and I'm joined by Jeff Garrett, who's going to talk about how mortgage lenders react and respond to that. Jeff, let's talk about the hedge fund industry and other industries where there is performance-based reward. What's the lending climate like?
Lending climate is strong. I understand the hedge fund industry, and they're perfectly happy to lend to individuals within that industry without any question.
In terms of how the compensation package may look for somebody in that industry, what might that look like, and what are the different elements that lenders are going to have to consider?
It depends really whether the individual is employed or self-employed, i.e. they might be a member of a partnership. From the employee's perspective, the structure is relatively straightforward in terms of there will be a salary and a bonus, and the lenders will typically apportion 100% credit to the salary, and then they'll look at the bonus track record, and they may discount that down to perhaps 50% when they're doing the affordability. For the self-employed or the partners in the LLPs, again, it's all about the annual income, and that is generally made up predominantly by cash. There's less sort of stock elements in the hedge fund industry for the partners of hedge funds. It's typically a pretty much a cash compensation.
And presumably that's very helpful when it comes to putting an application together. If you are self-employed, which effectively means an LLP member in that industry, is the trading history important to your profile and your application?
Absolutely. Most lenders will look for a 2 or 3 year track record, and they will take an average of that period of time in terms of the income that they're using for the affordability model. The only thing I would mention there is if the most recent year is down on the average, they will use the most recent year in most cases, which needs to be borne in mind. And there are fluctuations, of course, in the hedge fund industry. We see, the clients that have, some years that are stellar years, and then other years that are slightly more fallow, and that is pretty typical in that industry. In which case, we would probably look to illustrate a longer-term track record, perhaps over 5 years, to give the lender comfort in terms of the individual's performance, because ultimately they are remunerated very, very much on their individual performance.
And if you are an LLP member and effectively the majority of your compensation is a performance-related bonus, although of course, as you say, it's actually trading profits, does a lender still consider that a bonus, so perhaps doesn't quite account for all of it? Or do they just see trading profits and therefore look at the history of those profits and say, well, that's the income that we look to respect?
Yeah, it's an interesting question. And the key actually is that they, as an LLP member, they'll look at the income as a whole, not how it's split up between regular draw and bonus. They actually look at the whole income. So the bonus element doesn't really get discounted in most cases. Some lenders do, but most don't.
Whereas with an employee, perhaps that's more likely. So an interesting outcome if you're a member of an LLP. And why would somebody in the hedge fund industry look to a broker when securing their next mortgage deal?
Probably 2 elements for me. I believe that you would want to be using a broker to secure the very, very best rate. And the other element, which I think is very important, is the time that these applications actually take. Hedge fund managers have precious little time. They're at their desks early, their days are long and intense, and they don't have a lot of time. So we can take that stress away from them and look after the process from start to finish and make it seamless.